What's going on, everybody? Jeff here. Welcome back to the channel. The ping pong game continues. The market has been range bound ever since last Thursday's massive rally after the CPI numbers came in a little bit better than expectations. Now, it's very normal for the market to take a little bit of a breather, need some time to base, consolidate, and cool off before it makes its next leg in the same direction or before it reverses back. So in this video, I want to talk a little bit about the news that is happening, what is expected the week ahead based on history, and take a look at some critical charts. It's going to give you a good idea of where the market could potentially head over the next few weeks to end the year. So let's get right into it. First off, this is exactly what I'm talking about. This ping pong range, we broke up into this level, SPY's about 394, bounced off 400 a couple times. Now on Tuesday, when the producer price index did come out, we did briefly kind of break through that before we just came right back down to the range. Now I've talked about this numerous times inside my videos. When we are in a bear market, these failed breakouts and failed breakdowns are very common, and you can clearly see them on larger time frames. I say to everybody inside the group that I'm very hesitant to go heavy, and especially a longer expiration dated contracts on the first breakout. I really want the retest to hold. And yesterday I had mentioned to everybody, if we get sub that 394, okay, which we did, we bounce off the 390, and it's no surprise coming back. You look at this double top from the end of October and the beginning of November. No surprise, we bounced off that 390. Okay, there was a lot of demand sitting in that area. Also from the actual day last Thursday. No surprise, I said to everybody, I really want that 394 to hold, showing that old, support that was broken through now becomes new resistance. And clearly here we are right back inside the range. Let's talk a little bit about some news. Now, yesterday, Nancy Pelosi had finally announced after a very long era that she is going to be stepping down. Now, I think the market took any news that it could kind of get just to rally a little bit yesterday. Yesterday's volume was very low until this news was released. This morning, existing home sales came out. Now, they fell for the 9th straight month. Now, home, sales and the housing market as a whole is very delayed. Okay, when mortgage rates start to rise, you have the your individuals that are still buying in cash or are still still pre-approved and locked in at their low rates, and it takes a long time for the housing market to really start to correct with the overall stock market, the economy, following GDP and so forth. And we're continuing to see home sales falling. We're continuing to see the home prices come down just a little bit, although it doesn't really warrant the increase that we've seen in mortgage rates. I've talked about this before as well. The prices for homes have not come down enough, right? What you used to be able to buy at $3,000 a month, you're seeing a little bit better, of home prices. They're coming down about, maybe 8 to 15%, depending on where you are. In some areas of the country, they're not even coming down that much. However, when mortgage rates up over 100% from where they were 6 months ago, it really offsets that, and your monthly payment is just far over than what it was 6 months ago. Still a lot of downside to happen. Okay, so let's talk a little bit about the positive, which investors are eyeing right now. This is the CME Group's Fed Watch tool and what they are pricing in right now, okay, for the December 14th Fed funds rate. All right, now, these 75 basis point hikes are going to end, really sooner than later. We've had a good stretch of them. They've been consistent. We're getting to a point where we're at 4%. The target is a little bit, construed. Some say 4.5%. We had Bullard come out and say he's thinking 7%. I think that's a little on the high side as of right now. But we've heard about that 5% range, okay? And they're not going to go from 75, 75, 75, continue it, and then just hit zero. It's probably going to slow down a little bit. We're going to get a 50, maybe two 50s, get a 25, kind of slowly start to base before we start to hit some neutrality and see when this, inflation starts to come down. Inflation is very similar to what I just explained when it comes to the housing market. It is delayed, all right? But right now, investors are currently pricing in a little bit higher of a 50 basis point hike as of December. Now, CPI comes out just before that, so it'll be very interesting to see if we get that 50, expect the market starts to get a little bit of a pop. All right, now I think it will be nothing more than just a dead cat bounce because, like I said, there are still many other macros that we've talked about, okay, that are leading to more downside inside the market. Now let's look at the short term, okay? Generally, not only after, midterm elections, especially when they're gridlocked, the market really likes okay, gridlock. So you have, the Democrats that are in control of the Senate. You have the Republicans that regain control of the House. It's gridlock. It shows that nothing really, extraordinary or extreme is going to pass. And markets like that. They like stability. They like consistency. So there is that going for us after the midterm elections, even on a shorter time frame. Okay, Thanksgiving week now. Everybody who was with me last year and the year before, especially, we remember these turkey crack runs is what they call it. Okay, it's when small caps run and they run hard. Now, small caps have really taken a backseat over the past, really 9 months, pretty much the entire year. It'll be interesting to see if some of those pop. We do have Grinder today, which was popping. I think it went from $12 pre-market all the way up to $71 as I'm making this video. But it'll be interesting to see if any of the small caps, pop. But overall, the entire market, Thanksgiving weeks, tends to be bullish, as I have highlighted right here. It's your large caps. We're getting into that Black Friday. We're starting some of the holiday seasons. We're getting a really early look at what the potential for the sales and the interest could be leading into, Christmas. All right. And we're going to see how that changes from some of the projections that these big retail companies have kind of, listed, just saying, listen, we expect a little bit of a slowdown. You have, FedEx and UPS that are trying to adjust some of their deliveries, what their expectations are going to be. So things are a little bit mixed as of right now. I hope this gives you a little bit of an outlook of what potential we have to the downside, obviously to the upside. We're going to let the charts dictate all of the work. We really need to get out of this range. And there still is about 4 hours of market open as I'm making this video on Friday. Okay, getting out of that 394 above that 400. The clearness is going to be the retest, okay? And it's very easy. I find this, very common for a lot of people. It's easy to look back in hindsight and say, oh yeah, I could really see why we bounced off of 390. But taking a look at these larger time frames and, while the candles are developing, the pattern is forming, I feel like people have a little bit harder of a time. All right. So keep in mind of these areas. We're going to want to break out these areas for any clear direction. Now, a couple of things I do want to talk about are two pretty big companies that really are setting up for actually more downside. So you take a look at Tesla. All right. Now, there's a little bit of speculation here. We have right now. All right. We've got Elon Musk that is, you hear him talking about Twitter, and investors are starting to think to themselves, listen, is Elon Musk just going to really, put all of his attention into Twitter? Is he going to start to back away from Tesla? Elon is, the driving force for Tesla and Tesla's, valuation. Okay, so we're breaking below a weekly critical level. You can see here around this $192 level. We're currently sitting at 178. We had some wicks, in this area going back into the start of the year. We formed a little bit of a double bottom. That's when we ripped to that all-time highs, and it held as very strong support. Last week, we hung on. We broke through, but it came back up and it closed above it. This week, unless something miraculous happens in the next 4 hours, we're going to close below that level, getting even farther below that 175, 176 area. It really leads up for, some more bleeding to the downside. Your next areas are going to be right here where we have a heavy demand zone. Okay, buyers are going to be lining up. They're going to be, ready to start buying in this area. It's anywhere between that 130 to probably 145, 150 is going to act as a big psychological level. Okay, now just remember, we are in a bear market, and these fake breakdown, these failed breakdowns are very common. So if we close here at the end of today, next week we rip right back above, we continue to move back up. It's very common. If you're looking to take a longer, short position, if you're looking to add a long position on Tesla, always remember, you're looking for a failed breakdown to occur. We get back up and confirm above this 208 level to go long, or you're looking for this to retest and hold below that 192 level. Okay, it's very nice over these larger time frames. They tend to play out a little bit better and hold a little bit more consistently. And like I said, you can see them because they're much slower. Next one we're going to talk about is Microsoft, and we're starting to get a little bit of a retest here. All right, so it's really following the entire market. It's a very bearish setup. We're getting some of those bear market rallies that we've seen, okay, back in March, as well as in, July for the entire market we saw, especially leading into August. This one was a little bit weaker. We didn't really get it, as strong as the entire market. You can see here that this level, all right, this 245 level had that resistance. We broke through. Perfect. Everything I've just explaining. We broke through, that resistance, came back down. Old resistance became new support. And here we are. We broke through that. Kind of tested a little bit again a couple weeks ago. It held through, come back up. We're testing it right now. This will be very interesting to see. Now, the more times this level get tested as resistance to the upside, the higher chance that we're going to break through. If we break through this level, this is going to carry the market to have a little bit more juice in it. However, if it continues to the downside, here we are back in this heavy supply zone. So guys, that's going to be it for this video. I hope this helps you going forward. I'll see you in the next one.